The fourth event where Bitcoin is split in half is almost here. About every 4 years, something called Bitcoin halving happens. During this event, the number of Bitcoins given out as mining awards cuts in half. The Bitcoin price is 6.25 BTC right now, but after the fourth cut, the prize will only be worth 3.125 BTC. Here in this video, we are going to explore how fourth Bitcoin halving will cause a massive price increase. Before we begin, make sure to subscribe to our channel and press the bell icon to get regular updates. Let's get started. What is Bitcoin halving? Bitcoin halving is an event that occurs in the Bitcoin network where the reward for successfully mining new blocks is halved at regular intervals. A halving event lowers the reward Bitcoin miners receive for validating transactions by 50%, slowing the rate at which new Bitcoins enter the market. For every 210,000 blocks that are mined, or about every 4 years, there is a halving. This will continue until 2140 when the 30-second halving takes place. By then, Bitcoin will have reached its maximum limit. After that, miners will only be rewarded by transaction fees that users pay as a reward for confirming transactions. One of the most important ideas in Bitcoin tokenomics is the halving, which makes sure that new Bitcoins keep coming into the market over time, while keeping the maximum number at 21 million. 93%, 19.53 million BTC, have already been mined, leaving only 1.47 million BTC to be mined in the next 116 years. How does Bitcoin halving work? As the Bitcoin halving mechanism is built into the software, it happens automatically and does not rely on a third party or central authority. It doesn't need a third party or a central authority to do it. When transactions happen in the Bitcoin network, they are stacked into groups called blocks. Miners are rewarded when they successfully verify transactions in a block. In Bitcoin, the prize that miners get is automatically cut in half every 210,000 blocks that are mined. So far, Bitcoin has been cut in half 3 times. Around 210,000 blocks were mined in the first one, which changed the block price from 50 BTC to 25 BTC. The second was in 2016, when the 420,000th block was mined and a prize of 12.5 BTC was given. In May 2020, there was a third halving that cut mining earnings even more, to 6.25 BTC. When the last half is cut in half in 2140, the award system will only be based on transaction fees. What happens when Bitcoin halves? The mining reward goes down during a Bitcoin halving, which is the main and most obvious change. Bitcoin miners are getting half as much money for successfully mining a new block. By halving, the number of new Bitcoins that go into circulation is cut in half. The rate at which new Bitcoins are made slows down as the block price drops by 50%. Because the supply is growing less, inflation is lower for the coin. As halving keeps happening, the network gets closer and closer to this maximum supply. Once the maximum supply is met, miners will no longer get block rewards in the form of brand new Bitcoins. Instead, transaction fees will be the main thing that motivates miners. In the past, when the price of Bitcoin was cut in half, the price went up in the months that followed. Even though miners get fewer Bitcoins for their work, the price rise that followed has helped make up for any losses. However, since the benefits are still going down, halving might not cause the price to go up by much, which would force some miners to leave the network. Bitcoin's halving effect on the price. In the past, price gains have been linked to Bitcoin halving events. This is because the slower rate at which new Bitcoins are being made can make them scarce, which could make more people want them and drive up the price. But it's important to keep in mind that the market is affected by many things, and price changes can be hard to understand. Taking a look at the last 3 price drops in half shows that after 6 to 12 months, prices generally start going up significantly. Also, the price of Bitcoin tends to go up before a halving event because buyers expect the price to go up again after the halving. But it's not certain that prices will go up during the next half because the conditions are different. What happens after the last Bitcoin halving? When Bitcoin's supply hits 21 million BTC, it will no longer be split in half. Miners will no longer get block payouts in the form of brand new Bitcoin after this point. As a result, Transaction fees paid by users will give miners a reason to keep confirming transactions. Because the Bitcoin network will be so big by then, on-chain transaction fees will be high. This will credit miners for keeping the network running. The reward will get smaller and smaller until it's worth 1 Satoshi, and there are 21 million in circulation. This will happen if the prize is cut in half every 210,000 blocks. 1 Satoshi is equal to 0.000000001 Bitcoin. It is the smallest amount of Bitcoin and can't be split in half. Is Bitcoin halving good or bad? One of the main economics that draws people to Bitcoin is halving. Because Bitcoin has a maximum supply and its inflation rate goes down after each halving. Unlike government currencies whose supply is always going up, Bitcoin is not bound to be inflationary. People think that having Bitcoin is a good idea for the economy because it puts downward pressure on the value of the digital currency, which should help it rise in value over time, as long as demand for Bitcoin keeps growing. But Bitcoin has been criticized because the way it is set up, with a supply limit and a halving mechanism, makes people want to hold on to or even hoard their tokens without spending them in the hopes that the price will go up a lot. Because of this attitude, which is also called holding, some people see Bitcoin as an investment and not a way to pay for things. In conclusion, how people feel about Bitcoin's halving relies on their views as well as the larger economic and market situation. It is an important part of Bitcoin's design and monetary policy, and it can have different effects on miners, investors, users, and other parties. Others might see it as a weakness that makes Bitcoin different, while others might see it as a strength. That's all for today's video. If you enjoyed this video, leave it a thumbs up, and let me know what other topics you'd like to see covered in the comments below. Don't forget to subscribe for more. Thanks for watching. Have a wonderful day.